As I am a community manager in the ABN program, and just to understand in a nutshell what the ABN is about. The AfricaBerlinNetwork, who's responsible for this, is actually a collective platform that has basically brought different communities within the startup ecosystem across Africa and Berlin. And the whole purpose of connecting startups and ecosystems is to enable investors, startups, bridge builders, through the different tools that we do, like the workshops that we have. This is one of them, and events. And recently we had a delegation trip this year. And the whole idea is to support startups and SMEs in their international expansion and just being able to overcome the barriers. And we work together with many people. We work with experts, leaders, institutions, accelerators, and we're out to share information and connect and open new doors. So part of us sharing and connecting and opening up new doors is events like this that allow us actually to connect with you and allow us to just have knowledge transfer. So this session is basically an open session. And with me, we have an expert on board. I will be your moderator and your host. But with me, I have Mr. Steve Njenga, who had asked to just give a small introduction, and then we will take it from there.
Thank you, Eric. Hi, everyone. My name is Steve Njenga. I'm actually a finance professional with background in corporate finance, transaction advisory, and investment banking. Currently, I'm working with a company called Vergrow Africa. I'm actually the investment and the transaction lead with main focus in Sub-Saharan Africa. So in that case, we work closely with startups in terms of not just as a VC firm, but also as an incubator, taking them through the whole investment journey, fundraising, and even post-investment monitoring. In that case, now ensuring that the funds are well utilized, and even the entire process of mentoring and ensuring that the business is in good hands, and even now taking them to the next level. Beyond that, I'm also involved in conversations across Sub-Saharan Africa in terms of empowering businesses, in terms of networking. We have a platform we call ourselves Time is Now Africa Tina. It's purely a platform of professionals in DFIs, PE funds, and the entire spectrum of corporate finance to be able to empower ourselves and even to share knowledge across board, across the spectrum, and even be able to even fundraise for people who have businesses that are fundraising. So I'm greatly involved in such forums, and beyond that, I'm looking forward to a very interactive session, and I hope we're all going to learn and even network. Thank you so much, Eric, for this and the team.
Thanks, Steve. So the narrative of today's conversations is going to be around this. We have talked a lot in the past about startups having access to finances, either it's capital raising or just being able to facilitate the different operations. Our first session, we talked about failure stories. And one of the things that came up was most of the failure stories were surrounding the whole aspect of not being well prepared for fundraising. And today, a reason we have Steve here is to actually bust the myths. What are the myths around investment readiness? What is it about the startups that make them not ready or ready? Or what is it investors are looking for? And are the expectations of the startups being met, or vice versa, that of the investors? So Steve, is basically, I just want to invite you and just give us a highlight. What is this, what is it investors are looking for? And what is it that startups are looking for? And what is it that's causing a disconnect? How do we align the two so that they can be relevant, considering finance is so necessary for the startup?
Thank you, Eric. And allow me to just keep my video off just so my internet to be stable. First of all, to start from the investor side, and this is a great forum, I must say. I'm happy to be here again. I must say the first thing I feel investors really expect from, I must say, the startup is first to understand where your business is at, which stage are you in the business. But sometimes you find someone is maybe the business is 1 year old or 6 months old, but you're looking for debt. And at that particular point in the business, as an expert, I don't believe you should be looking for such kind of financing. Probably you're looking for, what you call like impatient capital, for lack of a better word, and you should be looking for patient capital. So mismatch between the investors and in this case, I would say the investee, the person who is looking for money now in the startup. Because when the business is very young stage, in the early stages of the business, you're supposed to be looking for probably stakes and selling stakes in the business. In that case, equity. So that mismatch can really bring misalignment as far as the relationship with the investor is concerned. And again, also another thing, and I feel this cuts across not just in Africa but globally. You find most startups don't have, they have not kept proper books of account. You ask someone for a cash flow, for a balance sheet, for a profit and loss, or statement of financial position, or statement of comprehensive income. You find probably there are no records in place. And in that case, an investor would like to see the performance of the business. What stage are you at? Even have you understood your market? Can you be able to give a market analysis in the, even from not just from a finance perspective, but even from a growth perspective? Do you understand the kind of challenges you're facing as a startup? And because the investor largely would want to offer such solutions beyond injecting funds, is about, does a startup understand what is expected of me, or where is the stopgap, or where do I come in and fill in that gap? Again, also when you're looking, especially when you're looking for an investor, it's always good to as we would say in the layman's language, get your house in order. In this case, what we call a pitch deck, or in other cases we can say an IM, an investment memorandum, or even a teaser. Do you have something you've put in place that you can be able to present to your investors? So in this case, a pitch deck is just a very high-level document that shows the background of the business, when the business was formed, who are the founders, what motivated the business to be formed, and really how has been the journey, and have the expectation been met? Where do you feel that you need someone else to join in the business, and also a high-level analysis of the performance. How's the business performed over that particular period? And also, what are you looking for in the market? How is the market like? What's the position of that business in the market? And again, also, it's also good to highlight where do you feel like, what kind of funds? Because sometimes the ask is always missing in the pitch decks. You find someone has done a very good presentation, but then you're not very clear how much are you looking for. What stakes are you selling in the business? In this case, a startup, I believe you're looking for an equity partner, not debt capital. As I mentioned, that debt for a startup sometimes can be challenging, because obviously for cash flow purposes and even for management purposes. So have you clearly outlined have you done a valuation of the business? Because when you're looking for funds out there, it's good to understand also the valuation. Can you justify the valuation? And again, as the investor comes on board, are you looking for equity, for minority or majority stake, to give out the majority or minority stake in the business? And where are you looking at in terms of going to as a business? How is the growth trend like, and how do you project yourself in the next 5 years, in the next 7 years? Those are, from where I see, some of the areas I feel the investors are looking for. But when you come to the other side now of the startups, and I feel this is where now also, as Eric, you rightly said, there's been some, I must say, some conflict of interest, or even misunderstandings, especially when you find someone, let's say, like in the tech, in the fintechs, or even in the innovative industry, or any other industry, even agri-biz. You find somebody probably is looking for an investor who is well versed in that sector, or someone who can bring on board expertise. But you find the investor probably is not aligned to the business. Maybe someone, the passion is probably in healthcare, but the investee is in agri-biz. So that incompatibility can really mess the business, because the investor is not passionate about that particular business, but yet the investee is probably desperate for that kind of funding. So you find the investor who you've brought on board is not your kind of investor for that particular business. So that really messes business, and you find the ideas and incompatibility of ideas, and even the business is not headed in the right direction. And again, also, what I would say, what is the appetite of the investor in terms of the expectations? Because for a startup, you need patient capital. So you find most startups are looking for patient capital, as I rightly said, now on the side of the investor. But maybe the investor wants to exit in 3 years, and maybe at that point, that's when the business really needs the cash flow, the capital to grow and even to be stable. So I strongly believe the appetite of the investor and the expectation of the investee, they should be very well aligned. In terms of expectation, in terms of the return on investment from the investee, and also the exit plan of the investor, it should be very well outlined. And again, also, exposure to markets out there. Expect most startups are looking for exposure. Probably you're in fintech, you want to understand what people are doing in Europe or in America or in other regions globally. And probably the investor you brought in on board is not able to give you such kind of exposure or platform. So that's also an area that I feel is a lot of conflict, because probably the investee is quite passionate, would love to understand, even to get that exposure from other markets, but the investor is not able to give such kind of platforms. And again, also networking platforms. An example like the one we have in courtesy now of the team, Eric and the team. These platforms, sometimes you find the investors are not able to invite their investees to these kind of platforms. And investors definitely have these platforms out there in the global markets. But sometimes the investees or the owners of startups, they feel that there's that challenge. They're not able to access such platforms. They can be able to network with other startups globally, and even understand the challenges that people in the similar businesses are facing across the globe, or even in different sectors, or even in the same sectors. And another thing also I feel is about growth. The startups would expect their growth to be supported by the investors. So you find most investors are just looking for returns. They're not ready to put what would say the nuts and the bolts in the business. So that really has had so many startups, and that's an expectation from most startups. They would want the investor to support their growth. Maybe you ask for $100,000, and maybe you feel at some point you need maybe like a top up of $200,000 to be able to go to the next level, but maybe the investor is not in a position to. So such alignments should be there in terms of what the investor is ready to give and what the investee is looking to go to the next level. So those are some of the high level issues I felt I should raise, Eric. And I would invite questions. So far, I feel I've spent quite 5 or so minutes to highlight. So it's good also to hear from the forum what they think so far about the pointers.
Actually, one of the things that I look forward to is if people can share the experiences of investment and investor readiness, whether you received investment or you actually invested in a business, because I think this is where we critically learn the major lessons. I see Norma has her hand up. Kindly.
Yes,
yeah.
Yes, I do. Thank you so much. Before I raise the question, I just wanted to say that we can also add our questions to each other, because this is it's a learning platform where we're engaging, amongst all of us. So you can add in your questions in the chat room. Steve, thank you so much for that. The points that you've mentioned are very enlightening. I just wanted to touch on one point that you mentioned, the compatibility between the startup and also the investor is very important. And I think for quite some time, I'd been looking at it like at one point, like when you have startups where they're thinking, okay, no, we just want, for example, the funding, and they don't think about how the compatibility aspect is very important as well. In terms like how you had explained it, like you can't get someone who is highly invested in another sector coming in just because they've got the funds or they've got the resources coming in and saying, okay, I'm going to be investing in your business. So that's very important. But the question that I actually want to ask you, coming from the investor point that we also don't necessarily think of, is like, in terms of the investor, do you kind of look into the teams as well that make up this startup? And what is your stance in terms of like, okay, the structure of the team? Is that also something that, for example, kind of goes into a point of, this is one of the things in the checklist that I would want from a startup in terms of, okay, the pitch is correct, valuation is correct, et cetera, but also, are you looking at the team to see if that is something kind of like one of the checkpoints? I don't know how to put it in another way, but just to say kind of like, okay, the team that makes up this startup, is it also something that's very important for the investors?
Thank you so much for that. I mean, that's actually a very interesting question you've raised. And yes, it's true. Of course, the investor would be interested to see the structure of the organization. But as I mentioned, startups, it's a journey, I must say. The company or the organization is just building itself. So especially on a unique by unique cases, like now you're talking of fintechs, that the investor would want to see the capability of the team, especially when you're planning, maybe you're building an app or even building a system, an application that is going to be applicable probably in the financial systems of a country. So you'd want to understand the expertise of such a team. Do they have a track record? Have they handled such kind of activities? Probably you also want to do agribusiness. Do you have any background in agribusiness? Have you handled a similar project, not as an investor, probably as an employee, or even on a project by project basis? But when it comes to the structure of the team, sometimes it's more of current, mid-term, and even long-term. Because sometimes the team could even be 2 members, but the way the job is distributed amongst the teams, you feel they are capable as an investor, but then there's a clear growth plan. You find this team, probably there are 2 or 3 members, but they have a clear growth plan. Maybe in a year, the team will have grown to 5 or 10 members, depending with the specific roles. Probably finance team is combined with operations, but as a team grows, you don't want to separate the two. Probably admin is also combined with another department, but you'd want, as probably is a manufacturing department, you feel it's for starters, it's combined with operations. But as a team grows, the organization has a clear growth plan, how to separate the two. So really, it's about the vision of the business and the vision of especially the co-founders. Do they have a clear plan in terms of how the roles are going to be outlined? Is the team well tuned with the vision? And in that case now, so it's also good to mention the character, because the character is something that has been really overlooked in this region. And it's especially in my experience as an advisor, I find character has really messed so many businesses, because you should never eat from your business. In this case, I mean, the business is really doing well in the first 1 or 2 years, but you find most investors get tempted to divert money to other ventures. So that has really hurt businesses, because, for instance, say you're in affordable housing, then you sell your first houses and you do very well. Then you start now diverting and even diversifying to other businesses, probably start going to manufacturing, so that you eat to the core capital of the business, and that has hurt businesses. So such issues are also very, very pertinent and very close to investors' minds, because they want to understand, is this person who can be trusted with money? Are you diligent enough? Can you be able to finish what you start? So sure. So in terms of checking the structure, that's how I would look at it. And I see also Shaima is also raising the issue of the experience of businesses trying to find investors from other countries. Shaima, can you be able to elaborate on this?
Yes, I just want to know if any businesses trying or get through an experience to find investor at other countries. Like if I'm like for now operating in Egypt and I'm seeking an investor from Kenya, for example, or Ghana, how should I get ready for such a thing? And what are the methodology behind finding an investor from different ecosystem and different country? Because especially I'm not sure if the other ecosystem, but for example in Egypt, a lot of businesses go and seek investors from Dubai or Gulf or stuff like that. I just want to hear the experiences in this area.
Yeah, fantastic, Shema. Yeah, sure. For instance, and that's why now, like people like us, I mean, exist in this side of the world, or in the whole chain of businesses, because when you're looking for money outside your area of operation or your area of jurisdiction, it's always good to use, we call them transaction advisors, and that's That's also one of the areas I really handle. So a transaction advisor is now the person who is going to handle now this role for you as an investor or someone who is looking for money. In this case, an investor, or even an investor. When you're going to a market you don't understand, so you go and engage a transaction advisor. This could be on success-based, could be depending with the nature. But for startups, I normally advise to let it be on success-based, because you need every cent, you need every dollar, you need every shilling to be able to keep the business afloat. So in this case, have an engagement in place with a transaction advisor. This is a person who is basically going to link you with the investors in that particular market. This is a person who is going to assist you in preparation of investment documents, the pitch decks I mentioned, the IAMs. This is a person actually is going to present the business case to you on behalf of the investors. And in this case, also even to guide you in terms of the areas to highlight as far as the pitching is concerned. And then also he'll be the face. He or she will be the face of the business. In that case, ensuring that every kind of query raised by the investor is handled adequately and professionally. So in that case, we'll take you through, he or she will hold your hand all through the whole cycle of the whole fundraising, be it debt or equity. And in most cases, especially those professional transaction advisors, they're supposed to come also on board as I mentioned, post-investment monitoring, to ensure that also the investee and the investors' interests are well catered for, and ensure that the relationship has thrived, and even take the business to the next level. Maybe you are a startup looking probably for seed capital, take you through the whole stage of financing all the way probably now to a mature sort of capital. So that's how I would look at it, Shaima, and I hope I have been able to address your question.
There's also a question from, just before you go back to that, there's a question from Joy Kamali. Basically, can an investor just invest in a project and get equity of the project instead of actually getting equity of the company? So can investment be locked on a project as opposed to equity of a company?
Sure. Very brilliant question as well, Joy. Sure, yes, you can invest on a project by project basis, because, and this is actually the case all over the world. You find just a good example, like we all know Centum. Centum is actually one of the biggest, I would say, investment entities in this country. So like when they're doing one project, like now we know of Two Rivers project. Sorry for those people who are not from Kenya. So in such a business, you find a company has 5 or even 6 projects that go. So in that case, they normally operate what we call SPV, special purpose vehicles. So for every project is an SPV in its own. So when an investor is coming on board, he or she will just be focused on that particular SPV. For instance, again, going back to Centum, which is a listed entity, so I believe it's familiar with most of us. We find an investor will just invest in Two Rivers, but then you find Centum has other projects across the country or even across the continent. So, but the stake will only be for that particular entity or for that particular SPV. But now the company now is sort of like what you'd say like a holding company, but under it there are several SPV. So I mean that is usually, and that's what I would advise, especially an investee or someone who is doing affordable housing. For every project you're undertaking, it's a separate SPV. You're even able to separate your cash flows and even be able to manage your projects effectively, and even avoid overriding and even draining your core capital from one project to the other. It's one way of managing your cash or even your capital efficiently. So yes, it's very possible, Joe. I hope that addresses your question well.
Yes, it does. Thank you.
So at this point, I just want to open, if there's anybody who has had an investment experience that they'd like to share, how it was and what it was like, probably may not be what was shared by Steve, but just an experience, just for us to just hear. I know we're many people from different parts of the continent. There's a gentleman who came from South Africa. Oh, he's gone. Okay, if you're not from, basically anyone from the region, you'd like to share just a testimonial of what you went through, an experience in looking for investment, it's open. No one has an investor story. Any experience? Okay, so I'll ask a question. What makes a business investment attractive, Steve? I mean, is there something like you become attractive to investors? And what does that look like?
Thanks, Eric, for that. I was also looking forward to hear experiences from members in the forum, but I know they will open up as we go, as we proceed. Yes, a business can be really attractive to investors. You can really, a business is like an individual. It's how you package yourself. And if you package yourself in a very presentable way, then you're going to attract the right kind of investors. You're going to attract the investors that are going to inject enough capital in your business. And one of the areas, as I really mentioned earlier on, is having the right set of accounts in the business, or even being able to maintain proper books of accounts. And for instance, when the investor is asking how has been your performance, be prompt, don't delay in terms of sharing information to the investors. Make sure that your books are in good shape. Make sure that if you ask for cash flows, that your cash flows are okay. They are credible. They can be able to be presented to any investor in the world and even be able to pass. And again, also the element of even how you package yourself in the market. For instance, you're building a brand. Make sure that that brand is strong enough that anybody can be able to relate with it. Even though you've presented the brand in the pitch deck itself, it can be able, somebody can easily identify with it. Probably you could be offering a solution, but it's not coming out clearly, especially when you're pitching to investor. So that solution you are offering to the community, or even to the business solution offer, it should be very clear. It should be that clarity of vision. Somebody should be able to resonate with it and understand and even invest in it. Another area, and it's now becoming a core area as far as the investment world is concerned, is the issue of impact, especially when you're doing, let's say, healthcare, you're doing education, you're doing even affordable housing. Are you solving issues to do, like, let's say, in light of SDGs? Are you able to support some of the areas that are supported by, sustainable development goals, like poverty alleviation, supporting, creation of employment? In that case, probably you've given employment maybe to graduates. That should be able to come out clearly in your pitching to the investors. Are you able even to support women in your business? Probably your business is offering job opportunities to women from disadvantaged areas. That should really strike in the as you present to the investors. Even the issues to do with as I mentioned, poverty, and also, as I mentioned, also, what is the sustainability of your idea? Can your idea withstand the test of time? Like now came COVID. So many businesses were hurt by COVID, but how many survived? So can your business sustain such kind of calamity, such kind of events, macro and microeconomic factors, that whatever happens, your business is able to go beyond the test of time? There's a clear path. What do you say, a growth path, or even the business can be able even to beyond the startup, it can become a mature business, all the way even to be listed in a stock exchange. That's how an idea should be striking enough to the investor. And that boils down to the issue of scalability. How scalable is your idea? Is it just an idea that will be stuck as a startup? I mean, as a startup, then it goes to the next level. Then, I mean, the idea gets lost in the whole maze of business. So scalability is key also as well. And again, also the issue of compliance. Is your business compliance with the laws of the land? Because compliance is a key thing. For instance, KRA, Kenya Revenue Authority, or even other revenue authorities all over the world, at some point, will you be faced with tax? The taxman will be on your neck, and probably maybe you've been foregoing certain areas. So how compliant are you, even in setting up the whole structures? Have you been compliant? So the investor should be really keen, is always really keen to see such kind of areas. Even your level of innovativeness. Are you able to innovate your idea to even go out of the ordinary, that you have scratched beyond the service as an investor? I mean, as a startup founder, that you can be able even to show how the idea is going to grow and even how it's going to touch thousands, if it's not millions. And again, also, as I conclude on that, it is about the awareness. How we are, that level of awareness is supposed to be very clear as you speak there to the investor. In that case, do you understand your market? Do you understand your competition? Do you understand, even in case you'd need partnership, do you know who to work with? In case you need JVs, joint ventures, do you know who to bring on board? Or even in the case of, let's say you need a strategic investor, what kind of a gap that is missing in your business that you feel that strategic investor is going to bring on board? So, and issues like collateral now will come later on when the business matures, because you're able also to build the business to a case that it can be able to collateralize itself. So, but track record, that now goes back to the track record. If, say, an investor is able to call your banker, is able to call your lawyer, is able to call your accountant, that they can be able to speak positively about you, that now goes to the track record. It's always good to even state references as you speak to the investors, that yes, I've worked with this bank at tier 1, at tier 2, I don't know, tier 3 bank. This is how far they have taken me. I've worked with a certain investor, even a certain advisor, and this is their track record. I mean, this is my track record. So an investor is really keen about that relationship that you have formed along the way, because really investment or an investor coming on board is another relationship we are forming. And if you have not been able to sustain other relationship, then really you cannot even be able to sustain the one that involves capital. So Eric, I think that's how we look at it in a nutshell.
Okay, any comments to that point? Now, there is the other issue that I'm having, what I've seen with some of the startups who work in the ecosystem, whereby it's not very clear the rules of the investment and what it's going to be. And premature investment seems to happen in some of these organizations. And one of the things that I noticed that came up a lot is they had not fully understood their operations. And as a result, they ended up failing with the investment. It's not that they didn't get the grant, they did, but they were not prepared. So in relation to operations of a business and being prepared, how does operations affect the investment readiness of a business?
Thank you for that, Eric. Sure, that's a key aspect of a business, especially the operations side, depending also with the nature of the business. For instance, if you're in manufacturing, then operations is a key aspect of the business, because I mean, it's in this case now involves the nuts and bolts of the business, straight from raw materials all the way to the production up until the final stage of production, to the selling and distribution aspect of it. So and this is also an aspect also, I think it's good to mention it as far as startups are concerned. Trainings, it's always good for a team to keep itself up to speed with the technology. For instance, you're in fintech, you're in agribusiness, you're probably offering a certain solution, maybe an app, or even consulting for a certain aspect of business. It's always good to keep yourself updated with whatever is happening from an innovative perspective, even within your space, because growth in knowledge is really key. And that comes now with the trainings. For instance, there are always workshops that are involved, especially certain sectors. It could be within the startup space, it could be even the space of a certain industry. For instance, people in FMCG, you find sometimes they are going to those forums to share their ideas, to share their experiences. So it's always good to have those trainings, workshops, and even again, also the capacity of the team. Is a team ready to go to the next level? Probably you got your first round of funding, maybe $100,000 US, and you're looking for more capacity to expand your business. Maybe you're looking now probably for 300 or 500,000 US. But is your team ready for that? Do they have the capacity from an operational angle to handle that capacity? And that's now when it comes to hiring. You should have now strategic hires as a business grows, because probably when you're starting, the person who's handling finance and admin is actually maybe it's a family relative, because that's basically how business starts. Family relatives, close family members, or even what you'd call people of goodwill. But then as a business grows, then you're supposed to have strategic hires. You need to bring on board now professionals. Maybe now is a time now to bring a qualified accountant, is a time to bring a qualified HR person on board, or other like now if you're in production, do you have a technical person now, someone who understands production, maybe a trained production manager. So in that case, now it depends on how you state your business, and it's always good to understand how the business is growing. And even as a business grows, ensure that the capacity is built and the right mindset is in the business. Otherwise, then the growth will really overwhelm the business. I've seen other questions coming. Is the investment only limited to money or cash? Yeah, sure. Joy, it's not really limited to money and cash. If you look, especially if you go to global platforms as far as investments are concerned, nowadays we even have investors who are really, especially from an impact perspective, probably out of Scandinavian countries, you find there are so many investors that are really concerned about investing now from an expertise perspective. Maybe someone is just coming on board, you're in fintech. These are someone who's done successfully in fintech industry and would want to share that knowledge or that expertise in this side of the world. And I mean, there are hundreds of there all over. And I've even interacted with some of them, and they're always ready to interact with businesses, especially businesses that involve impact, women-led businesses, startups that concerns youths, or even startups that are coming up now in these emerging economies. So really, investment is not always limited to money and cash. Sometimes it's a combination also of the three of them. Cash injection of as equity, what you see, a hybrid of real cash. Sometimes someone is buying stake, and even also you're bringing on board expertise, and that also depends with the nature of the business and even also the location, because you find let's say like you're operating in DRC, you may need logistical support to be able to, maybe you're doing a great business in the southern side, and you want transportation to be able to transport or even be able to connect with other regions. And DRC is not well connected, especially from an infrastructure perspective. So you may need that logistical support. So really investment, Joy, goes beyond that, but it also depends with your negotiation skills as a founder. Are you able to raise and even to identify that I have a skill gap and I don't have the capacity to hire for such a skill gap? Maybe you feel you need a lawyer on board, but you really don't have that capacity. So you go and pitch to respectable investors out there and be able to bring out your case and say that this is what I'm looking for, and really, if I get this kind of support, then my business is going to go to the next level. I've seen also the best average equity to give during negotiation of investment. Joy, this is I would say is a moving target. It really depends with what you're looking for, because and this is a question that the late Chris Kirubi used to raise a lot. Would you want to own 90% in the business that is worth $100,000 US, or do you want to own 10% in the business that is worth $10 million US? So the question, the answer is we all know the answer. So really it's about knowing the capacity of the business. So sometimes you can even give the majority stake because you feel that the business has a potential to grow, but you don't have the right or even the access to capital. So you bring in a majority investor who is able to bring in, to inject the right capital, patient capital, and take the business to the next level. We have seen people like, Steve Jobs, the late. At some point, he was even kicked out of his business, not because you'd say he was foolish or even he lost the negotiation skills, because he was trying to build it, and he later came on board and rejoined Apple now when it was a global brand. So it's really about how you structure the whole negotiation and you understand the path you're following. So I always advise, and even I always have these conversations with our colleagues in the industry. So it's always good to open up to this, because sometimes you can limit your growth because you don't want to seed a good percentage of your equity, and yet probably you can seed even 40, 50%, 60%, and bringing an investor who is going to take you become a billionaire in a monster. You can imagine those people who started off, the companies now that are global brands, like Facebook, when Zuckerberg was calling his friends. I'm sure most of them shied away. Maybe they felt it's not the right idea, but this is what we call the skin in the game. Sometimes you find out there, you find someone who really understands the business and has a skin in the game. You bring on board such people, and they're able to bring a lot of value that you even become maybe a 5% minority shareholder in a global brand. So really never limit yourself to the level of equity you're giving out, but what should determine is the path that you've created for your business.
I've just added a question there. When should you sit out of investment opportunities? Is partnership better than investment?
Do you say that again?
The question is, when should you sit out of investment opportunities? And is partnership better than investment?
I'll start with partnership. The interesting thing about partnership is that you share profits, and also people forget to say that you also share losses equally. So people are always quick to go for the profits aspect, but when now the tire meets the road, then the business is not doing well. Then as partners, you're supposed to now contribute equally to the business, because it's really a partnership. But then the advantage, I must say, of partnership is because you're in it together. So the risk is equally shared. Probably you can be able to work as a team, but then again, it limits you to that extent, because in the case of now, like now, probably you're looking for funding out there. So partnership is not a very clear structure, because somebody will feel like it's a huge risk. For instance, if one partner God forbid dies, then the whole partnership gets dissolved. So it lacks that impetus, that sense of corporate governance, as opposed now what you'd say an investment, because an investment is sort of like an SPV. It's a special purpose vehicle in investment, or even it has more credibility from say from a business, even from an investment, or even from a fundraising perspective. Somebody can be able to inject capital in your business when you're operating, when it's more well structured in a business sense than even in a partnership. But partnership also depends also with the nature of the business. For instance, you're doing consultancy, so maybe you're a lawyer, so you are partners in the business. So in that case, maybe there are synergies that you're bringing as partners. So really, it depends with the nature of the business. But really, if you want to grow and to go to the next level, then I would go for the investment route or the business route. And there are times, yes, you should sit out of investment opportunities because you've done your due diligence. And this is something I feel most investors are, or most, I must say now, this I'll speak from an investor's perspective. Something called due diligence. Actually, when you are structuring the whole chain of fundraising, due diligence, or what you call DD, is a key aspect of it, because this even takes sometimes even 2-3 months to finalize the due diligence, because there is a technical and there is the commercial due diligence. And both of them have to be really thorough for the business or for the investment opportunity to make sense. For instance, you're investing in a country like Ethiopia. We all know repatriation is a challenge there. To be able to get your money out of Ethiopia as an investor is a big challenge. So have you done your due diligence, or you just invest in Ethiopia, then 6 months down the line, after the business is generating now income, you try to get your money out of it, then you cannot be able to repatriate the same because of technical challenges from a legal perspective. So so I would say, when the due diligence, when an opportunity fails on due diligence, or maybe you want to invest in Bitcoins, have you done your due diligence? Have you understood the business? Because the other challenge I've seen, and most investors have made this mistake over and over again, is to invest in a business you don't understand. And this is about passion. You want to invest in a business that is dealing in pharmaceuticals, you must understand the pharmaceutical industry, because the investee or the founder will be sharing reports with you, will be sharing the progress of the business with you. Are you able to connect with the business? Are you able to understand every stage of the business? So really, if you don't understand the business, then it's always good to, sit out of it, or even if it does not speak to your values, because again, values are things people always overlook. Maybe the business is engaged in money laundering activities. Down the road, it will come to catch up with you, and it will hurt your investment. It will hurt even your reputation out there. So really, it's always good to look even from an ethical perspective, and even to look from even a referral perspective. Is this business even as an investor, are there the right references? Even now, as a co-founder, and if when someone is injecting $50 million in your business, but somebody cannot be able to authenticate the source of the business, somebody is not ready for you also to do it, because due diligence is twofold, actually, not just from an investor perspective, but also from a co-founder, the owners of startups. Have you done your own due diligence to the investor to understand where is this money coming from? Where is the track record? Is this an investor that will bring me trouble, maybe 2 or 1 year down the road? So really, those are some of the challenges, Eric. I feel that someone, if it does not speak to your heart, then really sit out of it.
Steve, thank you so much. It's unfortunate we only had 1 hour of this monthly session. And just to remind you that every first Wednesday of every month, we have a session on the topics. The first one was on failure stories, and today has been about investment readiness. And actually, soon in the program, we may start having, there is a plan to have master classes to actually help all those who are there. So we'll take note of some of the questions. There's Steve's link there. Steve, I want to thank you so much for coming. And I want to thank all of you for being part of this Meetup Wednesday. And please share it amongst your platforms. We'll definitely have our videos coming out soon, and we'll actually share them out. And actually, you'll be able to see the whole series of the Meetup Wednesdays. And unless there are any announcements from my colleagues, I just want to say thank you very much for being part of this Meetup. And until next time.